Yo, what is up, everybody? Hopefully, y'all are having a good Monday. Hopefully, y'all are gonna have a good trading week this week. But other than that, I'm doing this video from a request on Instagram about using market session liquidity and how to use it, and pretty much going over my indicator that I do use, which is the ICT Killzone and pivots. And this is pretty much all of the settings I do use for this indicator. So if you want, you can just pause the video and get these settings here. But other than that, that's pretty much all I use. Um, then I do want to go again, talk about time-based entries as well. And I know this one is recommended from Instagram, so, and one of my students in my Discord. So yeah, these are all the settings that I do use. That's pretty much it, all I have in this indicator, and all you really need for this indicator. But other than that, today was a perfect example of using market session liquidity. So here I have an example of us playing out with the longs that we did have and how we could have structured these long plays. And a lot of people were kind of confused or didn't see this trade at all. But with my model, it does follow everything it did need to. So just going over easy, just not easy, but like, of course, just going over simple ICT concepts. We do see that we are navigating from a 1 hour gap, and just assuming from the daily, this daily candle was not printed yet, at least not the way it looks like. But we had opened up here, and we needed to sweep our high here. So from there, we needed to at least implement some sort of high, or before we could reach this daily low, since we just ended up breaking bullish right after opening. So to see was easy. Read from there, we're going to target opposing liquidity instead of internal range within this PD array. So if we hop down to, just doing a top-down analysis, everything does match in our favor. So we tap into a 4 hour gap here, showing bullish order flow, and we could just confirm that by going down to different PD arrays. And then after that, what caught my interest more was this volume imbalance that we have here, and that we do end up respecting right on the CE of it, and show good rejection. So here within this volume imbalance, we do end up having a rejection there. So since we found everything on the 1 hour, we go into the 5 minute, and the 5 minute doesn't look too clear, really doesn't give me too good of a perspective and outline, because we have so many gaps within this point here. So I want to kind of have an early entry within the 1 minute to avoid all of that, just in case I do go break even, or at least if the trade does go my way to target opposing liquidity, I'm in for good RR as well. So just keeping up with just bearish order flow and looking to change into a bullish state, we want to see us change in state of delivery, or give us an inverse for value gap after sweeping liquidity. So just generally sweeping market liquidity. Here we have Asia sweeping on NQ, but then on ES we don't have any sweep of liquidity on market session on Asia low. So from there, it is SMT within market session. So we are able to indicate that we are probably going to reverse here within this range, and if not, then we're just having some sort of lag. But in this case, whenever we do switch to our bullish sentiment, we'll be able to tell, because the order flow will be different. The order flow will change from bearish to bullish. So here we have SMT within market session liquidity, and that's probably the best liquidity you could find, because if one doesn't sweep a market session and the other does, then that's just more probability of us going to change and change differently. So not change differently, let me just rephrase. We're going to just change order flow. So here we just want to wait until a CISD or an inverse for value gap if we do get one, but if we don't get one, then we just end up not trading, since that's just following our checklist here, and from previous well, at least for my Discord, they know my model inside out. So here we have a sweep of liquidity, and then we have an inverse fair value gap that we did catch here. So you could have just entered solely off the inverse fair value gap, but I like more confirmation and using the change in state of delivery. So I would want to wait for a displacement over the CISD here. And so that's when we get the candle there. And that's whenever we want to go into longs and have our stop loss at the protected low. And then we would want to target opposing liquidity, either using market session, using either London high, or using a previous day New York high. So those are two opposing liquidities that's easy to target, and then at the same time, this is all-time highs as well. Here, and it's bugged on the daily candle, and we are already at that point, but we're not yet. So just, obviously from, telling us from the narrative of the daily, we're just end up going and targeting this all-time high target. So it's just sticking out there. Since we didn't go back to internal PD array on a daily, we're going to obviously target this all-time high range. So just going down to the 1 minute, we would just long from there, and that's how you would catch these longs during this time. A lot of traders were confused on how a lot of traders caught these longs, but it was just pretty simple. We had that volume imbalance, and we rejected or respected it in this case here, but we're rejecting and just going up. That's what I mean. But using proper ICT concepts, we could end up getting into these longs and having execution here. So we'd end up longing here, and then we would just wait for price to play out. And price plays to our TP using market session liquidity and time-based execution, because at that time base, at that point, market had opened, and as soon as market opening, we just ended up pumping. So within the new model that I constructed within Discord, I did start trading under, well, not under, but just a little bit before market open, because that's whenever we do have high volatility. And then at that 10 a.m. PO3, we really don't see any action anymore. So continuing the cycle, we really don't see a 10 a.m. PO3 within this cycle. We just end up kind of giving us, consolidated or accumulated price, and then we end up going to make our all-time high. And then from there, we just end up going into a bearish state and into a sell model. So really, which is pretty simple day to day. Just using simple ICT concepts, you could have caught these longs. But that's pretty much a trade recap. I didn't execute. I woke up late, so I wasn't able to catch these longs, but they were really easy to kind of navigate through and kind of put into the chart and actually have an execution. But the only thing that wasn't really a plus to me on this trade, everything was there, everything that followed my model and my checklist. It's just that these 5-minute gaps were kind of scary. So we had 3 of them to go against. So it was just, luck of the draw here that we ended up just being bullish and taking all-time high again. So just keeping up that bullish bias and just trying to find a rejection within a PD array, or it respecting the PD array. Within this case, we had a volume imbalance, so we would end up taking this trade since we did follow the checklist here. But yeah, that's pretty much it for that trade recap and how you could use market session liquidity in your favor and time-based execution, since we are opening in a opening at 9:30, and 9:30 is market open, which is really high volatility. But other than that, macro sessions will be your best friend for time-based execution. So anything within the hours that end in 50. So any hour that ends in 50, and it translates to the next hour always to 10. So it lasts up to 20 minutes. So I don't know, that was kind of confusing description, but it's a 20-minute window. So it'll be like this. So at any hour, you would have a macro session, but the most important ones are the ones within session-based liquidity. So in the beginnings of a new session of liquidity, or the ending of the ending of a session liquidity too as well. That's how I use my macro sessions, and then at the same time I use another one called end of day macro, which is just your 350 to 450. I mean no 420, no 410. My bad. 410 on a macro session. So I like to use the end of day macro as a model, and that's one of these. That's some macro timing for that. So that'd be a time-based execution as well. So I would just mainly focus on looking if you're in a macro session. So if you're just looking at a macro session, just look at the hour, and if you're around the 50-minute range, or if you're in the range of the 10-minute range, so of any hour. So that's pretty much how I use macros. There's other people that use macros in between, but I'm not sure why or the concepts in between that. But yeah, that's how I use time-based liquidity. And here during the 9:30, it's just market opening, so it's just high volatility. So that is just one of those moments where the market is going to react pretty strongly. So market opening is my new strategy and go to this time around.